Welcome to the B.F. Anderson Technical Report for October the 15th. This is a quote by Peter Lynch that I think is important. It says, far more money has been lost by investors preparing for corrections or trying to anticipate corrections that has been lost in the corrections themselves. Now, I don't know what he bases this on, but I think it's a lot of wisdom there. You can really worry a lot about the election. I ran into a young man the other day that told me that he got completely out of the stock market because he's worried about the election. There's always going to be issues. There's always going to be things to worry about. So the best thing to do is use a trend following technique that helps you understand that as long as the trend is up, you stay with it. If you get into a bear market, see, one thing about trend following is you'll never go through a long bear market. And you'll never miss a long bull market. It's just the way the numbers work. So trend following makes sense. And what Peter Lynch is saying is, don't worry so much about day-to-day activity. It's going to be the trend that truly matters. So let's look at trends. Here we have the NASDAQ. As you can see, we have the 25-day and the 50-day moving average, which acts as a trend line. But it's a mathematically derived trend line, no subjective opinion. No, because I could sit here and I could draw lines all over this graph, but the 25-day moving average and the 50-day moving average are absolute numbers. So you can see here that, we're still in an uptrend. We made a new high on the NASDAQ. Then we broke down. This was a 10% drop in 3 days. So we had a major correction, continued to make a lower low. Now we're starting to work our way back up. So this indicator, and especially because the lower moving average has turned up, is very positive. Here we have the weekly indicator, which is positive as well. This is the 35-week moving average. As long as the NASDAQ, and we also look at the S&P 500, but as long as the NASDAQ continues to stay in an uptrend above the 35-week moving average, and the 35-week moving average is in an uptrend, you're in a bull market, so don't argue with it. Here is monthly graphs, which very few people look at, monthly graphs, but I think you should. This is a golden cross. This gave a golden cross back after the election in 2016, so we have basically been in a bull market ever since, and we continue to be there. Same for the NASDAQ. We're on a golden cross. Same for China. Actually, China went through some pretty difficult times here, but it looks like now things are starting to stabilize. I would not ignore China. I think you have to pay attention to it. Now, here's the aggression index. We're seeing much improvement there. As you can see, we made the high back at the end of August, early September, got the correction. People became defensive. Now they're starting to become more aggressive. Higher low, higher low, higher low. Now we're making a higher high, but we haven't made an all-time high. But if you look at the weekly indicator, which is where we measure this on a weekly basis, you can see we're very close to an all-time new high. Now, the indicator is very simple. As long as you stay above that 40-week moving average, and the 40-week moving average is in an uptrend, this has been back-tested. We're simply saying you're in a bull market and investors are acting aggressive. Here we have 3 economic indicators we keep an eye on. Here is interest rates, again, continuing to stay relatively flat. Not a whole lot going on there. We got the 200-day moving average in a downtrend. Interest rates are just not going anywhere right now. Same for the price of oil. The price of oil continues to stay in a downtrend. Got somewhat of a small bounce in here above the 200-day, but the 200-day continues to stay in a downtrend. I would avoid oil. This is financial stocks, kind of a similar situation. 200-day is in a downtrend. We did get a bounce and a break back above the 200-day, but we're starting to challenge it again, and it is in a downtrend. Not good. All right, here we have the S&P 500. Now, we've looked at the NASDAQ, the 25-day and the 50-day. Now, let's look at the S&P 500. Again, you see the correction. Now, we're coming out of it. That lower moving average is turning up, somewhat positive. Now, here's the 200-day moving average on the S&P 500. We're holding above it, back in an uptrend. Things look good. Now, new highs, real positive here. Now, realize here on the new highs, what I'm doing is that this is a 15-day moving average. So I'm not taking new highs absolutely as of today, because as of today you have 152 new highs, whereas my moving average is showing 110 because it lags. But it to me, I think it's better to use a moving average on this. So you can see, we started the correction after making a peak in August. We came down to only 50 new highs a day on average over a 15-day period. Now we're starting to rally. Things do look more positive. You can see here with the NASDAQ, it does tend to follow what's going on with the new highs. So hopefully new highs have bottomed out here, and we're going to start making more new highs, which does look pretty good. Now, new lows, no problem. As long as we're not seeing more than 40 new lows a day. Now, this is on the New York Stock Exchange. We don't want to see no more than 40 new lows a day. We're not seeing that. Doesn't mean anything. Okay, sentiment. Here we are. This is the put-call ratio. This is more of an institutional measurement of sentiment. And I got to tell you, the institutions are all in. They're very positive. So the next graph, which I think is really important here, what I've done here is I've taken the American Association of Individual Investors bullish survey. They do this survey every month. And then you have the number of bulls minus the number of bears. So the higher the number, the more bulls than bears. Well, you can see here that the bears have totally, overwhelmed the situation here recently. Now, this has only happened 2 other times where we had these kind of readings. So in other words, there's a tremendous amount of pessimism out there on the part of the public, simply because I believe they're watching TV too much and they're worried about the election, they're worried about the coronavirus. However, economically speaking, there's probably something else going on, because like in the prior graph, we noticed that the institutional investor is very aggressive here, whereas the retail people, just regular Joe Smith, is not optimistic. So we got super pessimistic. Now things look like they're starting to improve. So if we go back and look at every time this has happened, where we got extreme negative readings, then return to somewhat positive readings, you can see that the market generally makes a low and then we start a major uptrend. So actually, this is somewhat of a positive. I'm just saying that I believe that retail investors are going to become more optimistic, because I think over time they're going to move away from fixed income like CDs and bonds and so forth. They're going to start putting that money into the stock market because they can't make any return on the fixed income side. So we'll see. Could be interesting to keep an eye on, and we certainly will. Now, here is another graph I thought was interesting. This is a decisive breakout. This is the Dow Jones Mid-Cap Growth Index, which is the mid-cap growth stocks. These are not the smallest companies. They're not the largest companies. They're right in the middle. So you can see here, we got the March 23rd low, rally, and now we're breaking out, making all-time new highs on this index. This is a very positive sign. Now, here is another calculation I did. This is the U.S. Home Construction ETF, where we're looking at home building, and I'm doing it at a ratio to Treasury bonds. So, how well are the home building stocks doing relative to Treasury bonds? Well, you can see a decisive breakout here. Home building is booming. I'm hearing that there's all kinds of activity in the home building area. We are seeing stocks such as Carrier Air Conditioning, things like that. So just keep an eye on these stocks. Now we're going to get into the top 5. I want to really emphasize the top 5 now is not a buy list. This is nothing more than stocks that are in our database that are showing unusual strength or unusual activity. Sometimes we buy some of these stocks, sometimes we don't. Now, we did take a position in Fastly. However, we exited the position based on just too much of a drop-off today. However, we may buy the stock back. We don't know, but it is holding up above the 10-day. You did get a gap-up buy signal on this. This is a software company that makes the internet faster, especially for video people like Zoom Video. All right, here we have Ceres Therapeutics, which is a biotech. Biotechs continue to look good. Stock is in a nice uptrend. Big gap-up buy signal here based on their earnings report. Here we have Peloton Interactive, which is, bicycles that you ride to do exercise. Well, the stock has just been incredibly strong, very strong uptrend, above the 10-day moving average. I think it looks interesting. Now, I haven't really talked very much about the volume. Volume is very important because this is where you see, is this where the retail investor is going, or is this where the institutional investor is going? And I got to assure you, you're going to make more money getting in front of these institutions than you will getting in front of individuals. So what we do is we look for something called a volume signature. Now this is Tesla. Tesla has been a great investment for our firm over the years. We have owned the stock in the past. However, we don't own it right now. But I am seeing, it came back on the list, I am seeing somewhat of a breakout here, but on somewhat anemic volume. I'm not getting the volume signature that I would like to see. So if I start seeing volume in the 100 million, a day range, and we continue to see a strong uptrend, we'll take another look, but not at this time. This is Tupperware. We've been, looking at this stock for a while. I don't really understand the movement, but it is starting to kind of form a cup here with the descending handle. Could break out. We'll just have to keep an eye on it. We don't own the stock. It just keeps popping up on the list for some reason. So that's it. Thank you very much and have a good day. Let me know if you have any questions.